The altcoins are getting absolutely hammered. And I already hear the excuse. People say, of course the altcoins are going down because all of the market is going down. Bitcoin is crashing and so it takes the altcoins with it. But really, that's only part of the story. Yes, Bitcoin went down by 3% in the last 24 hours, but the altcoins went down much more. This is the others dominance. How much of the entire cryptocurrency market cap is currently in the altcoins that are not in the top 10? And in the last 24 hours, this declined by an additional 2.5%. Now, this is just in the last 24 hours, but actually this trend is very representative of what's currently going on in crypto. Have a look at this longer term others dominance chart. This is the beginning of 2022 and the altcoins underperformed the larger caps by more than 60%. So again, this is the others dominance. The thing is that the situation is actually even worse because the others dominance is just looking at market caps, right? It compares, say, the Bitcoin market cap and Ethereum market cap with the smaller altcoins market cap. But there is two effects here. The first effect is that there's more and more altcoins over time entering those others. So that artificially increases the market cap of the others. And also there's more and more tokens that get issued by every single project. Also artificially increasing the market cap, while the prices might actually do much worse than the others dominance implies. Have a look, for example, at this very long-term market cap chart of Worldcoin. Just as an example, Worldcoin is very close to its all-time high with its market cap at 1.7 billion. But now have a look at the exact same time frame and look at the price chart. It looks much, much worse. We used to be at $10 per Worldcoin. Now we are below $1. And so this difference over here is not shown in the others dominance chart. More and more projects launch over time and more tokens per project hit the market, which artificially increases the market cap. Still, the others underperformed the larger cryptocurrencies quite constantly over time. Now there's one more problem with pretty much any investment, and that's the issue that attention and prices are highly correlated. As the price of an asset goes up, more and more people look at this particular asset. They're wondering, should I buy now that XYZ is going up? It's true for the stock market, it's true for the property market, it's also true for the crypto market. As the price of an asset is increasing, we also tend to see the trading volume going up. So trading volume could be seen as an expression of interest and of activity as well. So have a look at Dogecoin, for example, right? We have these massive pumps and subsequent dumps, then another pump and another dump again. And what we see here at the bottom, that's the trading volume. Now the issue is that trading volume is correlated with the price. Most people transact with an altcoin when the prices are high, and much less people transact with an altcoin when the prices are low. So the vast majority of people that enter a new position do so at the higher prices, and then they tend to potentially sell as the price declines. Very few people look at assets that are currently not discussed and that are not in the limelight. And that's why so few people are successful at buying low and selling high. Because really, the attention, the news coverage, the activity, it's peaking together with the price. And so the situation for altcoins isn't just bad today, it's bad in general. And it also has something to do with capital flow. Timing the exit on a chart like this is much easier than timing the entry. Because even though the asset isn't very trendy when the price is low, at least there's a lot of time. As in, over the many months, it's possible to buy an asset for the low. But the issue is that there's only a few days where the asset can be sold high. So finding the exit is much harder than finding the entrance. What's really driving crypto right now is Wall Street. It's not necessarily the retail investor anymore. And that's what's really long-term causing the altcoins to do worse than Bitcoin, Ethereum, and Solana. Here are the treasury company inflows for Bitcoin. So Bitcoin treasury companies spearheaded by Michael Saylor's strategy, formerly known as MicroStrategy. That balance goes up over time. And of course, as more Bitcoin gets acquired and taken off the market, the price tends to go up. And we've got the same effect now for the Ethereum treasury companies as well. This is the stacked ETH by public companies over time, and that's spearheaded by BitMine, the blue area over here. That's run by Tom Lee. And besides the treasury companies, we of course also have the exchange traded funds. And they tend to long-term also simply continue continue to buy. This is the number of Bitcoin that's held by the ETFs. So that went from 600,000 a bit under 2 years ago to now 1.3 million. And here's the number of Ethereum that's held by the ETFs. That went from 3 million to now 6.3 million. And so we really have to ask ourselves, will there be the same kind of capital rotation again that we have seen in the past? In the past, we saw Bitcoin appreciate over time and then people getting more risk on because we've already seen Bitcoin rise that much. Maybe there's not that much more upside potential. So new retail investors came into the market, started buying Ethereum. As Ethereum went up heavily, the same kind of case could be made for ETH. Again, new entrants came into the space and we're wondering what's the next Bitcoin and the next Ethereum. And that's then when the altcoins got hyped. But when it's now Wall Street through the ETFs and through the treasury companies, it's now pushing up all the prices. Are we going to see the same kind of rotation? Is Michael Saylor suddenly starting to buy Floki Ino or Dogecoin or a random decentralized finance project? I'm not so sure. Just have a look at a slightly modified version of this chart. What we look at here, you've probably never seen this before, is the market cap of Bitcoin plus Ethereum plus Solana, so those top three, and we then divide that market cap by the others market cap, so by the market cap of the altcoins that are not in the top 10. And we're seeing a clear trend here. Since the beginning of 2022, those three large cryptocurrencies outperformed the small cryptocurrencies by more than 200%. And in theory, this should not happen, right? When we buy more risky assets, when we buy the small altcoins, we should also get more performance, right? More volatility, more risk should lead to more performance. But that's not what we see here. And again, in this chart, one more time, we're just comparing market caps. And the situation when we just compare prices is much, much worse. Market caps are deceiving because really the return that we get is the price, and the token inflation has a massive impact on the price development. The problem really is that crypto doesn't have a sexy story anymore. It's all just long-term investing now. It's the big money that's getting in. In the past, there was always that sexy story. For example, here, right, the Dogecoin millionaire. But even he failed to sell at the top. He lost nearly 3 million in Dogecoin. Again, the problem that even when we are able to buy low and we make those massive gains, it's extremely hard to find the exit opportunity. It's extremely hard to actually take profit. This is the common narrative. Most people think that when Bitcoin is going up, when in general crypto is expanding, when times are bullish, that then the altcoins should go up even more because they are more risky, because they are more volatile. So when Bitcoin goes up 10%, most altcoins in theory should go up by 20% or by 30%. At least that's the official story. That's why so many people get into altcoins. They don't necessarily think that the altcoins will always outperform, but most people think that during a bull market, the altcoins should outperform. But it's not what we are seeing. Bitcoin in the last year went up by 71%. Now have a look at the smaller altcoins, the ones that are at market rank 800 to 900. How many outperformed Bitcoin? Here are 100 assets and we've got 1, 2, 3 outperformers. 3 out of 100 did better than Bitcoin, 97 did worse. And that's a truth that most people don't want to hear, right? The vast majority of altcoins underperforms Bitcoin most of the time, even during a bull market. And even if you're lucky enough to take one of those winners, it's very unlikely that you're able to sell the top because most people are greedy. And again, there's very few points in time where it's possible to sell for a high price. High prices are rare, low prices are common. And so please stop watching videos like this. Stop watching videos about the next 100x meme coin. You've probably already lost money with this in the past. You're probably going to lose money with this in the future as well. I've talked about my approach of using relative valuation bets often on this channel. I'm going to talk about this in a second again. If you don't want to make these very complex long and short and derivative setups, if you want to keep it simple, if you just want to buy something, then by all means, don't bet on the next 100x meme coin. Just buy Bitcoin. Just put a lot of the money that you're saving into Bitcoin and do this for a long period of time, and you still will be quite well off. Just have a look at this simulation here. If you bought $1,000 worth of Bitcoin every single month for the last 5 years, and today you'd be at close to $200,000. You would have outperformed the S&P 500 a lot. You would have outperformed gold a lot. And 5 years ago isn't even the best timing, right? We did go through a massive bear market in between as well. And so 5 years really isn't that long of a time horizon. Now, if $1,000 of savings is a lot for you, then of course, really the focus shouldn't be on investing. It should really be on income generation. Trying to figure out ways to sell your time for more money, potentially increasing skills, let's say technical skills, potentially changing jobs, potentially introducing another side hustle where you sell a bit of your free time, whatever it takes. $1,000 per month in most developed countries at least should be possible. If you're living in a poor country, if you're living in a country where it's very hard to make that kind of money, it's a different story. But even then, you can potentially make money on the internet. You can still get somewhat Western income by using freelance platforms, etc. There is a way to get to a healthy savings rate if you're trying this hard enough. And that should really be the first step. It's all about building a Nasdaq. It's all about learning how to accumulate wealth first. And you're not going to quote unquote make it by buying those random lottery tickets that all go down over time. Again, there's a 97% chance that you're not going to outperform Bitcoin over a year. And even if you find the lucky winner, there's a very high chance you're not going to sell on time. Now, some people might say that the train for Bitcoin has already gone off and that this strategy that worked 5 years ago is not going to work in the future. But if that's how you think, then you've probably not learned enough about Bitcoin. Just take the time to learn a bit more. Have a look at the token inflation, for example, of Bitcoin. Every year, there is 0.8% of additional Bitcoin that hits the market due to the mining activity. But at the same time, we see the monetary base expanding by 6.8% per year. So money devalues much faster. The ratio of circulating fiat dollars versus the number of Bitcoin that are circulating is going up. And on top of that, of course, we've got growing adoption, as in there's more and more investors that just buy Bitcoin for the long term, that simply just use this as a savings vehicle. Even without an increasing adoption rate, we would get an increasing price in Bitcoin. But because we still are early, we see more and more of the entire Bitcoin supply getting stashed away. This here, this colored chart, shows the percent of Bitcoin that has not moved for the last 5 years. It's now close to 30%, and I would not be surprised at all if that was at 40 or at 50% 5 years from now. And that, of course, also increases the price. The more people just hold, the more valuable Bitcoin becomes as a savings vehicle. Now, let's talk about something a bit more fundamental here. Most people try to chase the pump, right? They try to find the next 5 or 10x meme coin, maybe 100x, maybe 1000x. And the reason why there are so many videos on YouTube about the next 100 or 1000x meme coin is because it sells very well. Most people just want to turn $100 into $10,000 or $1,000 into $100,000. Most people don't want to risk much and then get the very high asymmetric return. The problem with that thinking is that it's not very far away from just gambling, from just buying lottery tickets, swinging the fences, hoping for the home run. But let's say you do make the return with a lucky bet. How likely are you actually going to keep those wins? There are a lot of news articles where lottery winners spend all of their money and then get bankrupt. There's even aggregate articles here. The top 7 Florida lottery winners lost everything. And so really, the vast majority of people fails at finding the next SPX token or the next virtual token. Most people just burn their money, similar to buying lottery tickets. 1/3 of all lottery winners lose their money within 3 to 5 years. You might remember this guy, right? The Dogecoin millionaire. He even went on podcasts, for example here, with Graham Stephan, who's very conservative with investing. And yeah, the Dogecoin millionaire did not sell the top. Now, I try to be different on this channel. I don't sell the next 100x meme coin. I think it's much better to try to find ways to compound the current wealth quickly but steadily. Really, once you get serious about investing, you don't need 100x or 1000x. It's not needed. Instead, what's better is to use systematic approaches that historically worked very, very well. For example, this here, right? I talked about this in the past on this channel. This is a backtest that I made for the best moving average for Bitcoin. If you bought and held Bitcoin, you would have gotten this white line over here. But if you timed the market using the 120-day simple moving average, you would have gotten 100% compounded every year. You're doubling your money every year, and this is absolutely massive over time. There's no need to gamble. We can simply just compound our money. Now this is just a backtest, but here is my own data. So if I just dollar cost average into Bitcoin, I would have gotten this line in gray. But because I timed the market with moving averages and with relative valuation bets, I got this line here in black. And I'm not just doing backtests or simulations of trading. I'm also not just showing my own data. I also started now trading for the community here. So the start was on the 10th of July, and so far we've got an annualized return of 79%. Very similar to what I got and what the backtest suggests as well. Fundamentally, being able to constantly compound capital over the long term is much more useful than trying to find the next lucky home run. You don't want to gamble. You don't want to end up buying scratch tickets. Instead, even though it's not sexy, it's really better to focus on the long term. It's really better to try to figure out where is there actually mispricing in the market. Where can we get constant alpha? Where can we actually invest larger amounts? Because that's the problem with those meme coin bets, right? We already get into this with the anticipation that there's a good chance that this goes to zero. Thus, we can't invest a lot of capital in this. We already have to psychologically diversify. We just bet a little bit of money hoping for this to do 100x. We can't really seriously invest. But once we reduce our volatility, once we use trading approaches that tend to appreciate relatively constantly, suddenly we can deploy much more capital as well. Because besides just the return here, right, the 79% APR, what I'm actually most proud of is the maximum drawdown of only 2.3%. It's about being able to have the best risk-adjusted return. The question should not be what's the next 100x meme coin. The question really should be, is there a way to become a better investor long term? And so I made actually a poll among the premium members of this channel. So that's over here. Has premium helped you improve as an investor? And 86% said yes. This is another number I'm very proud of. I'm quite sure that for most other memberships, this number would be much, much lower. Fundamentally, I think that any investing is a game of both luck, but also of skill. We have to maximize our expected return. We do not know what's going to happen in the future, but we can try to figure out what are the probabilities, what's really our risk versus return. And I've created a lot of content around this. How can we manage our risk? How can we maximize our return? How can we properly diversify? How can we find the right opportunities within crypto while not risking everything? In case you're familiar, it's a little bit like poker. As in, we do not know what the next card will be, but in general, we should bet more money when we've got a high chance of winning. We might not win with double aces, but the chance of winning is comparatively high. We should, in most cases, bet a lot of money. And so feel free to check it out. It's currently $125 per month. If you do not like premium, just message me within the first week and I'll refund you 100%, no questions asked. But if you're willing to spend some time, if you're willing to watch some videos, learn about investing, I'm quite sure that the likelihood is very high that you're becoming a better investor as a result of joining premium. Now, a link to premium should pop up directly here on the screen. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.